You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures and or options? Let's find out together, shall we? It is time once again for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network that is just booming these days. Thanks to everybody who is making our latest addition to the network very much a sister program to this one, the Futures Rundown. I'm making it such a hit. You folks are loving it, so that's on me. I should have launched the Futures program earlier, apparently. But hey, better late than never. Glad to see so many of you are responding. If you're one of those out there just listening to TWIFO, man, you're missing out. Wherever you're getting this, make sure you get the full networks. You can get the Futures Rundown, the Option Block, Vol Views, Crypto Rundown, all the fun stuff we do here, Advisors Options Bootcamp, you name it, here on the network. It's a smorgasbord, an embarrassment of riches on the network. Then if you want to go above and beyond, you want to join us for awesome pro Q&As like our friends with IB earlier this week, as well as Options Oddities coming up, maybe even later today. We shall see. Only one place to go, theoptionsinsider.com/pro is the place to go to learn more. As we learn who is joining us on the old CME Group Hot Seat this week, I am pleased to welcome back our old pal, Mr. Dr. Vix, a.k.a. Russell Rhoads, now holding court, corrupting future generations at the Kelley School of Business. Mr. Rhoads, welcome back to TWIFO, sir.
As always, very happy to be here. This is must listen to everybody involved in the CME Group Challenge, which is where you get to use an old CQG type machine and trade against a bunch of different universities. I'm making all three of my CME teams here at Indiana University listen to this program so we can maybe not be in the middle of the pack like we are right now.
There you go, listeners. We're back to back having derivatives professors on the network. Yesterday, we had Rich Excel on talking about his Derivatives Academy. He said he was making his kids listen as well. So I told him, The same thing I'm going to tell you. You need to quiz them after the show to make sure they listen. Say, hey, what were the movers and shakers for this week, perhaps?
Right.
That might be.
What is a mover and shaker?
What is a mover and shaker? There you go. Bonus points.
Yeah.
As we head on into, listeners, it's that time for the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we light up everything moving to the light side, aka the upside, and to the dark side over there at CME Group this week. And looking at the broad spectrum of products, you can see this graph for yourselves. If you follow us or if you follow CME on Twitter, listeners, you could see it looks like we're roughly, I'd say 60-40 red over green. So it's a pretty close to a split week. That said, the biggest percentage mover this week is coming hot and heavy on the dark side. And you know what, Mr. Rhoads? I think it would deeply impress all of your students who are listening if you ran down the movers and shakers for them. What do you think?
Sure. Which one do you, where are we starting with?
You can start however you like, sir. I let you choose. You want to go dark side?
I'm going light side just because I like to say 1, 2, 3, 4, 5. RBOB. No, RBOB up 2.18%. Oats and RBOB. That's a great spread trade, isn't it? That's a joke, people. Don't go if people start shorting oats and going long RBOB. It was a joke. You're not
doing a pairs trade, oats versus RBOB.
We're not doing oats RBOB pair trade. Maybe corn RBOB, but not oats. Oats were up 2.21%. We got one of my favorite stock market indices, the Nasdaq 100, was up, or Nvidia Light, whatever you want to call it, was up 2.53%. The tech sector, I love the sector futures. I want to see to get some more liquidity there. But the tech sector futures, which are basically futures versions of what I refer to as the XL funds, like XLV is, I think XLK is technology. Forgot what XLV is. But the technology sector, the ticker on that is XLK for the ETF, XAK for the futures, up just a little more than 3.5%, 3.52%. And apparently people are just making a fortune. Isn't it palladium that is in catalytic converters that everybody steals?
They do steal a lot of that stuff, yes.
Yeah, I just, the only reason it's in my mind is there was a guy in a high up truck on I-65 heading down to Indiana, and you could see where the two pipes were not meeting anymore because somebody had crawled under there and taken their catalytic converter. Well, if palladium's the metal that you're trying to get out of it, they had pretty good timing on stealing that from that guy because palladium was up 7.54%. Big move. More than twice the number 2 move there to the upside. You did mention that we got. I think one of these markets is about as red as I've ever seen, or one of the biggest moves I've ever seen if you exclude crypto. But starting from the 5th worst utility sector, XAU down 3.37%. That's very interest rate oriented. So, and we're going to hear from another interest rate future in just a minute, but that's not overly shocking because some things have changed with respect to the outlook for interest rates. Silver down 3.5%. I feel like that one has been on fire in the other direction a lot lately. Soybean meal, isn't that where you take the soybeans and you mash them all up? Down 4.84%, and then natural gas. One of the sort of widowmaker, down over 10%. And this is not the biggest drop, down 10.2%, natural gas. Finally, and it's too bad I'm not in the classroom right now and I can't make people try to guess because I don't think anybody would guess that this market would be down 17.22%, but the 3-month secured overnight financing rate futures down 17.22% last week. Oh my God, or on week over week basis, considering Thursday, the end of the week. So that is That's just a move. You don't expect moves like that out of interest rate markets. You used to get mad at me when I'd say, let's go look at options on interest rate markets because there's not a whole lot going on there with the volatility. But lo and behold, oh my goodness.
Yeah, it's not often we
SOFR.
see nat gas moving 10% and it is not number one in whatever direction it is.
Exactly.
So that's a banger week out here, listeners. A lot going on. We're going to parse it all in a second, but before we get there, let's dive on into a little bit of the CVOL movers and shakers. You can find these for yourselves, listeners. Just type CME and CVOL into whatever browser you're rocking. That'll get you to the CVOL dashboard. And then once you're there, set that high-low range for 1 week so you can line it up exactly what we're seeing here, listeners. And then, of course, we like to go for an ordered list so we can kind of get the order of the day. But, to each their own at the end of the day, how you like to view it. And then we'll kick things off just talking about 3-month SOFR. Things are popping on the Treasury vol side, listeners. The Treasury CVOL. Remember, there's two flavors. There's the yield vol and the price vol. We're starting in yield vol, 125.80, up nearly 6 points just today, pinning the needle for the week right now. The low is 116.97. So yield vol springing to life on the heels of that drubbing we're seeing going on in some of those rates products. Below it, we have the price vol. So the Treasury price vol, again, price vol and yield vol, two very different things, listeners. A 685, so you can see 125.80 versus 685 for the price vol. That's up 1/3 of a point today. Still a banger move because it's pinning the needle for the week right now. The low was 6.25 earlier this week. Below it, we have the AGS CVOL. That's at a 1990, up 19, a lot of 19s in the AG vol today, listeners. This one kind of split in the uprights right now. The low was 1971 for the week. The high was 2038. So kind of hanging out to the middle lower portion of that range right now. Below it, we have the FX CVOL, 844, kind of unched on the day. The high was 866, so just off the high for the week, and the low was 799. Below it, we have the metals CVOL, listeners, 1840, off 1/3 of a point just today, and burying the needle to the downside for the week right now. The high was 1938, so metals vol coming in almost exactly a point on the week. That's a lot for metals vol. Below it, we have the commodities aggregate CVOL, 37.35, off 1/3 of a point today as well. Kind of hanging out in the middle of its range, actually towards the upper end of its range, because the low was 36.18 and the high was 37.76, so almost 1/2 a point off its high right now. And then at the bottom of our list today, we have the energy CVOL, 59.26, off nearly a full point, 0.91 today, and kind of hanging out at the middle of its range for the week as well. The low was 57.45. The high was 60.79. So all sorts of action out here on the CVOL front as well. All sorts of action in our movers and shakers. Mr. Rhoads is kind of an embarrassment of riches this week. We could head out to the NASDAQ. We can go out. Well, our Bob and Oates not exactly lighting the world on fire from an options perspective, but 3-month SOFR and nat gas, soybean meal, and silver certainly delivering. Or we can go somewhere else, sir. What's floating your boat this week?
SOFR options really don't trade that much, do they? So let's go to nat gas.
They trade a ton. It's just almost impenetrable for our audience.
Oh, they're the new euro dollars.
Yes,
come on,
they
Russell,
are the
get
new
your brain together today, Russell.
Professor
They're a
Rhoads.
huge market. Never mind.
So we can go there if you like, but it's a
yeah. Let's go to SOFR. That's my.
I kind of had a feeling you were going to go there, which is why I already have it up on my screen, listeners, as we head on into the rates.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the world of rates. And we are tackling a monster here to kick off the show, listeners. There's so much volume, I almost don't know how to come to grips with it in any sort of way that is intelligible for you, the end listener. A lot of times we're talking about an active product, the 10-year, 2.5 million, the E-mini, banger day, 3.5 million. If we hit close to 4 million, man, we are lighting the world on fire. 3-month SOFR right now, listeners, 8.4 million contracts on the tape. We have a scenario where the most active option could actually be putting up 1 million contracts just by itself. In fact, it's not quite that high, but it's pretty darn close to it. We have the most active option this week in 3-month SOFR, doing more than almost the entirety of the metals complex and just about most other complexes you want to throw at it, just in one option. That's how active 3-month SOFR is right now, listeners. If you're saying to yourself, where is 3-month SOFR right now? It's 95.65, off just 11 cents this week. So obviously a lot of that sell-off coming on the heels of last week, but obviously just lighting the world on fire this week. And if you're wondering where the action is, is 3-month SOFR not really a 0-day phenomenon. Things tend to be a little bit longer term. In this case, we're going out 64 days, listeners. That's where 23%. So that shows you also how evenly spread out this paper is. Only 23% is enough to take the lion's share out here in the DEES contract, 64 days to go. You might also be asking, what is the vol, listeners, in DEES 3-month SOFR? It's about 54.25, off almost 6.5 points this week. So they're coming for the vol out there this week, which is kind of interesting because we looked at aggregate Treasury CVOL, and it's actually popping today, and it's been popping on the week. It seems like it's a bit of an aberration because if we go a little bit farther out in the term structure, we see the vol kind of firming up. But just in this near-dated portion of the 36 to 64 days, we see them coming for vol right there. So all sorts of fascinating stuff afoot. I can get into the skew, and man, this skew is wild. Before I get there, Mr. Rhoads, how can you even attempt to come to grips with a beast like this, sir? Go ahead, have at it. The floor is yours.
How do you come to grips with a beast like this? I'm still trying to figure out the 17% move and digging around on that one and seeing if anybody got ahead of it quite nicely. But yeah, this is the pit that you always used to want to show. It was Santelli always used to like to strategically put himself in front of the Eurodollar now SOFR pit. You would think that the volatility would have calmed down, and after we got that first Fed meeting, and we really haven't had a big surprise out of any economic numbers. So I'm really trying to figure out the why behind this one right now. Any hints? I would love to hear from people. And you go far out. This is the market that really does give you a pretty good idea as to what they believe the Fed's going to do. And they're going far out. They've got us bottoming at about 3.5%. I can tell you a lot of economists think we're going to bottom at a lower number than that. So there might be a longer dated trade to do on this if you think the Fed's going to be able to get more aggressive over the next 12 months or so.
Doesn't seem like folks are going that far out, at least at some of the flow we're looking at right now, listeners, because I said 23% of that paper going up in the DEES contract has 64 days to go. And again, there are multiple ranges, there's colors, there's all sorts of fun going on in 3-month SOFR. It's kind of the replacement for the Eurodollars. You remember with the Eurodollars, of course, there were the different colors, the whites and the pinks and all that fun. They have that out here in 3-month SOFR as well. We could spend the whole show just kind of breaking down the myriad nuances there. And maybe we will do that again because this flow is just on another level. But the big dog out here this week, listeners, with 394,000 contracts on the tape. Again, this is just 1 month, just not even a full strike, just one put option. It's the 95 half puts going away in December here. 64 days, 393,000 of these going up this week. I mean, just volume you can't even sniff in most other contracts. I'm thinking about Nat Gas, one of our other big percentage movers this week. Nat Gas, if it's really explosive, pun intended, it might hit 1 million, 1.2, maybe wild this week, 1.5 million out there in Nat Gas. I mean, we're not even sniffing 8 million contracts out. So it's just a different game entirely. And it also seems like folks, and again, this could be one of the reasons why the vol right in this particular series is depressed, is because it looks like folks were taking these off the table aggressively this week. 212,000 of the 95 half puts going up on Monday, mostly closing there. So folks looks like they're bailing there. Only 7,000 on Tuesday. I do love that too about 3 months SOFR and Eurodollar before it used to do the same thing. It would light the world on fire one day, 212,000 contracts. The next day, 7,000, maybe zero. It's such a binary product. It can be hot and on, and then it's off, completely off. There's very little middle ground. And then the next day, back on again, 100 and almost 13,000 contracts. Again, folks bailing on them. And today, about 62,000. Against the remaining OI, there's still size OI on this strike of 378,000. So if they close that many contracts this week, man, how many were open coming into this week? This is just a palooza of paper. By the way, it looks like Wednesday, folks were maybe rolling up into a higher strike here on the puts. Yeah, because it looks like we have about 100 on Wednesday, 113,000 the 95 half puts, and then rolling up to the 95 and 11/16. Haven't said that in a while. It feels good to kind of say that, going back to my old market makers and 16s and 8s days, listeners. Fun times out here. They did those about 128,000 that day, and that was actually the most active day for our number 2 most active, the 95 and 11/16 puts. Looks like we have some rolling action, but it looks like it mostly lines up just on Wednesday. That's the only day the numbers really line up. The rest of the week, we're all over the place. Like we said, the big day for the 95 half puts was on Monday, 212,000. Only 65,000 of the 95 and 11/16 puts trading that day. So clearly, if they're rolling 1 by 4. Maybe they got run over. I don't know. But either way, today, 20,000 of the 95 and 11/16 puts. Only 14,000 on Tuesday. So the lion's share of that volume, 129,000 of the 229 that have gone up this week, all went up on Wednesday. It looks like most of that on a roll. So, yeah, just paper for days. And if that's not doing it for you, listeners, you want to go maybe a little bit farther down the put chain. How about 95 and 3/8 puts? Those went up 196,000 times this week. So you're talking nearly 400,000, and then about 230, so 630, and then another 200,000. You're talking 830,000 contracts almost, just in these 3 puts we're talking about. That's going to dwarf most other complexes we're going to talk about on the show this week. So again, this volume is just overwhelming. 95 and 3/8 puts, the big day for those was also Monday, about 87, 88,000. So maybe there was some splits on where they were rolling to. Let's see. Tuesday, again, binary day, down to 10,000. Back up again on Wednesday, 75,000. Looks like they were opening on these all week long. And then 22,000 today. So closing all week for nearly 400,000, the 95 half puts. Opening most of the week on about 229,000 of the 95 and 11/16 puts. And opening most of the week on about 196,000 of the 95 and 3/8 puts. So, Mr. Rhoads, I've only done 3 strikes. I've done nearly 1 million contracts.
Yeah, that's in just a couple of things. So first off, for years, and I'm deviating to a slightly different market for a second, but for years, the Korean stock index and the India stock index, they would argue over which one was doing the most volume, and the notional on the contracts that they were counting the volume on was very, very low. I believe the notional on a SOFR contract is $250,000 for each one. So you're talking about big volume, but you're talking about big freaking dollars as well. We don't know. I'm not really sure if they're buying or selling those puts. It looks like they might be selling them, just looking at the skew. But do keep in mind, for SOFR, if you think interest rates are going to go up, you buy puts. If you think interest rates are going to go down, you buy calls. So just you got to keep that in mind. So if you're seeing a lot of put activity, maybe somebody if they're buying those, and I'm going to go doing some digging, got me all excited about SOFR this afternoon. If they're buying them, that means there's an expectation that we might see rates at higher levels than what's being priced in by the market right now.
Going all the way out to March, we also saw some put activity out there as well. It's 155 days if you're playing the home game, listeners. And this March did about 9% of the volume this week, with the 95 and 3/4 puts going up 105,000 times this week. Almost all of that on Monday. Again, going back to what I was saying about the binary nature of the flow out here. It's very weird. There's no other product quite like it. 73, almost 74,000 of these 95 and 3/4 puts in March going up on Monday, all opening. And then 21,000 the next day, closing on those. Then only 4,000 on Wednesday, closing again. and about 6,500 today against an OI of 145,000. So it's anyone's guess what they're doing with those 6,500 right now. By the way, I said before I would mention what's going on in the skew because I think the technical term is it is bonkers. Let's go out to the the D's back where we were before. Not a lot of action on the puts, which is interesting because that's where all the volume is. So maybe, there's still paper on the calls. I was saying it could be a lack of liquidity that is accounting for these somewhat aberrant numbers we're seeing here, but there's volume on the calls too. The puts last week in D's 2.7% rich, this week 1.4% cheap, so a little bit of a swing in the puts, but when you hear the calls, you'll see why I'm dismissing that. The calls last week were 17.7% bid. We don't see level, and you're starting at a 54 vol level already, so it's not like it's cheap vol. I'm not talking a 5 vol and they're 17% bid on top of that. No, this is already a jacked vol, and they're bidding it up nearly 20%. You don't see that too often outside of, let's say, an ag, where something's going crazy and it's roaring to the upside, or maybe energy is exploding to the upside, and you see crazy premiums. Precious metals, maybe not to this degree, but they get bid up to the upside as well. And then this week, nearly 2x that, listeners. The calls, so this is the level of premium, level of volatility for a 25 delta call in December 3-month SOFR. And I remember we're starting at a baseline of 54.25. The calls right now, 25 delta call, 31.9% bid. I don't know, Mr. Rhoads, I'm hard pressed to think of any other product we're going to talk about that is that off the charts right now from a skew perspective, sir.
And that's that really is just the nature of interest rates and forward interest rates, where they're going to trend in a certain direction based on what the outlook is for the Fed. So you got to assume that there's lots of assumptions. I mean, I'm kind of surprised that the put skew is above the call skew, but you would think that the assumption is that that rates are going to go down and that SOFR is going to move itself up some. So it's interesting to see that people seem to be paying up for puts. It's you're scratching your head a little bit, but back last spring, someone put on a very large trade using these types of options, and they were betting on the Fed funds rate getting to 6%. And that was a big put trade as well. So somebody might be thinking that if we get a spike in inflation, owning those puts is going to pay out very nicely. Of course, we did not get a spike in inflation this morning in the CPI. So, maybe they were putting that trade on in front of that announcement, hoping that they'd get some new volatility out of SOFR.
Just to clarify, that bid is to the call wing, not to the puts. So that's 31.9% bid to the calls. Out there.
Okay.
Premium to the calls. The puts are kind of middling, which
puts
is
kind of cheap.
Another weird thing. Weird thing out there. Let's look really quickly at the calls, because it's kind of just hard to ignore this much paper, listeners. You might be saying, well, maybe the calls are so rich because people are bidding them up. Let's go see the most active call in that expiration cycle, the D cycle, are the 96 calls, right? 96 even. So nice even level here, listeners. They did 71,000. So for most products, that's a ton of paper. That's more than, let's say, silver maybe did all day today, just in that 196 call. But 95 half puts did nearly 400,000. So the fact that the puts are doing so much more paper, and yet the put skew is negligible, and then the calls here are just crazy. I mean, again, it could be a liquidity issue, but it's not like they're not trading. 71,000 went up with these calls, including the big day was Monday, 30,000 mostly closing, 15,000 on Tuesday, 15,000 on Wednesday, opening both days, 12, almost 13,000 today. So apparently that's enough to get this call skew jacked to high heaven, listeners. Then we have the 95 and 11/16. So let's love saying that, listeners, going up 63,000 times today, also in December, or this week, I should say. The big days yesterday, 25,000, and then 23,000 on Monday, 7,000 on Tuesday, all opening. About 8,000 today against an OI of 77,000. Excuse me. By the way, the 96 calls have 275,000 contracts open. So there is some size OI on that strike. It just wasn't lighting the world on fire this week. So either way, listeners, tons of volume, a metric ton of volume in 3 months SOFR, and an aggressive bid to the calls. Again, this is very near dated to this strip here of pretty much the whites that we're looking at. If you go beyond these, that call bid also evaporates. The rest of the term structure, the calls are maybe 6-7% bid at the most, and usually a lot less than that. So it's a very, very localized phenomenon here, which is also fascinating. Mr. Rhoads, we could probably do the rest of the show on this absolutely insane product, but we probably want to squeeze
I was just having the same thought. I looked down at the time, and I was like, oh, my goodness, I think this is the longest we've ever spent. It's definitely the longest we ever spent on an interest rate market.
Something does almost 9 million contracts. It kind of screams for it, you know?
Yeah. So
where else do you want to go
I don't know. We want to go to natural gas?
I think let's take a palate cleanser into energy, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, go to the world of energy. I got so caught up in all that volume on the SOFR, I didn't even tell you where you can go to follow along with the show. Of course, CMEgroup.com/TWIFO, TWIFO, This Week in Futures Options. This Week in Options, TWIO should work as well. They may ask you to open an account. It's free, takes 2 minutes. And if you do that, you get access to everything CME does, not just this show. And then from there, you can get access to our reports. Go into that drop down. If you can pull your eyes away from the just gravitational well that is 3-month SOFR, you want to click down, actually, you want to click up about 3 slots from interest rates. You're going to go into energy, then in product family, down 3 slots to nat gas. And we're seeing nat gas, as we said earlier, on our movers and shakers this week, taking it on the chin, off 10% this week. It was number 4 in the other direction last week, up 7.5%. So it's been a wild couple of weeks for nat gas. You know, we were threatening the 3 handle not too long ago. Coming in this week, 267, off nearly 18 cents just this week, or 6.25%. Again, obviously, you go back to our show last week, you're off fully 10%. So no joy here for nat gas. A lot of things playing on this, a lot of things wreaking havoc in the energy space right now, not the least of which, of course, the hurricanes, but of course, unseasonably warm weather. Nat gas is one of the more seasonally impacted products out there on the docket. But you know what? It's not really slowing down the volume. Now, we're coming off 3-month SOFR, so maybe temper your expectations a little bit, but we're still talking about 1/10 of that volume, 824,000 contracts on the table. That's a banger week for nat gas. Usually we expect somewhere around half of that. So a pretty active week. Mr. Rhoads, people have been debating for a while, where's the future in nat gas? Is it threatening the 3 handle? Is it racing back to the 2 handle? We're hanging out a little bit shy of 270 right now. What's catching your eye in nat gas, sir?
It looks like, you know, the skew's kind of, I always look to the skew. That's always the first place I'm going on these things. And I'm with it down as much as it has been, I'm a little surprised to see it looks like the calls have a bit more of a bid than the puts when you go out, when you get out of 2024. And starts getting to 2025, it looks like, you know, we've got a bit of a call bid. You know, the most active options for both of the 2024 expirations that we've still got, the November and the December, those were put options, and then it's a call option, it's a call option, it's a call option. In fact, it's the 8-strike call. Did we see something like this about a year ago? Going into the year where we saw an instance in natural gas where there were, I feel like it was the 6 calls where somebody was buying, you know, like a strip of calls in with each month in the first quarter.
Yeah, they do a lot of strips out here. This week it's a 2 put strip going from, looks like from about March all the way out to October of next year, doing about 20,000 of each. But they have in the past messed around with 5 and maybe even 6 calls in the past too, yeah.
I'm looking at 8 calls.
I see some 11 calls trading this week as well. So there's all sorts of fun to get into.
Yeah, no, I mean, it's you know, you're talking about, you know, the debate is around, you know, 2 or 3, and I'm looking at, you know, way out of the money call options. Are we thinking? I mean, is this a you know, is this a hedge against World War III? Is that, you know, exactly what are you expecting to happen to make natural gas do that? We know it can do it, but I'm rooting for them on that one, except for my utility bill.
I don't know if what's happening in the world to drive usually not a good thing. That's probably Putin rolling tanks again, or maybe doing something even more catastrophic. Sometimes I see that paper and I kind of wonder. I know on our network we've had a lot of new people come into this show, a lot of new people obviously discovering the new futures show, a lot of new entrants to these commodities markets over the last few years. So I think some of them, their frame of reference is, pun intended, skewed. You know, they look at nat gas and think, oh, 9 is a normal level for nat gas. We could easily get back there. When most people who've been in nat gas forever, it was a very sleepy product. If it blew through 3 to the upside, that was a big deal. So 9 at 10 calls that we were talking about a couple of years ago, that was very much an aberration. So to see anything like that trading again is kind of weird. So let's get into it, listeners. We're kind of teasing you. Let's talk about the paper we're actually seeing out here. I said about 824,000 contracts on the tape. Almost 41% of that going up in the November contract. Has about 15 days to go, listeners. Actually, I'll take that back. It has about 18 days to go out here, listeners. What is the vol, you might be asking, in Nov Nat Gas? About a 60, up about a point this week. So getting a little bit frothier. Obviously not as explosive, pun intended, as we've seen Nat Gas vol get to in the past. It's the one product outside of really crypto and some of the others. 3-month SOFR can get kind of wild too. It's one of the few products that can really threaten triple digits realistically. At a 60, it's firm but not explosive. And then, of course, skew-wise, last week the puts 1.5% cheap. This week, kind of flat. I consider anything within a point to be pretty much flat. Last week, the calls were bid, 4% bid. That has come in a little bit now to 2.9% bid. And leading the dance out here this week, listeners, is kind of what you would expect. I said we're at about a 267 right now in that front future. It's the 2.5 puts going the way of the dodo in 18 days that are leading the dance with about 45,000 contracts. Trading pretty actively all week long. 14,000 on Tuesday, slightly closing. 11,000 on Monday, slightly opening. And then 11,000 again on Wednesday, and about 9,000 today against an OI of 34,000. So that makes sense. We're heading towards that 2.5 strike again. People putting that on makes a heck of a lot of sense. And then below it, we have about 43, almost 44,000 of the 2.25 puts. Now you might instantly say, okay, we're seeing some rolls, some put spreads, but it doesn't seem to be the case. Really, outside of Monday, that's where they kind of line up the best. We have about 10,000 of the 2.25 puts going up against 11,000 of the 2.5 puts opening on both. So could be an opening put spread certainly going up there. Then we have 18,000 though today. So today's the big day, going up only 9,100 of the 2.5 puts. So if they're rolling, they're doing it 1 by 2, which could be the case. I mean, the 2.5 puts are looking a little better this week. Maybe you're taking those off, doing a little bit of the old house money roll. As we say, you got a little house money burning a hole in your pocket. So maybe you buy 2 of the 2.25 puts. But either way, 18,000 of those 2.25 puts going up against 50, almost 51,000 of the 2.25 puts that are open right now on that strike. So there's size OI on that strike. 8,900 on Tuesday, opening there, 6,400 on Wednesday. So some of the paper you would expect, Nov 2.5, 2.25 puts going up this week. Makes a heck of a lot of sense. Let's see, but Russell's talking about some of the funkier paper. So let's go find it, shall we, listeners? Let's go out to February of next year, where we've got some wild things afoot. I was talking about the 11 calls. Those are going up in February this week. 5,300 times. February, by the way, the future out there in February, 3.25 off 20 cents this week. So obviously, again, getting back to that seasonality of nat gas, a very different beast. February versus October, November, very different beasts. So not surprising to see that future more bid out there in the February cycle. The vol out there, 62 1/3. Skew-wise, those calls are looking pretty juicy. Again, getting back to that seasonality of the term structure, seasonality of the skew as well. A 14.6% bid were the calls in February last week. Still pretty bid this week, 13.3%. The puts, nobody wants them, 7.8% discounted. So that looks to all the world like a bit of a precious metal skew. Selling the puts, buying the calls. And let's see what we're seeing out here. Like I said, the 11 calls, we're lighting it up 5,364 times. 3,200 times they traded on Monday, closing against 1,600 of the 9 calls also closing on Monday. So it looks like somebody took off a 1x2 on Monday, listeners. One of the 9s by 2 of the 11s. That's an interesting one if you're really, I mean, are you going to sell one and buy 2? How are you doing that? If you buy one and sell 2, you're also leaving your, I mean, it's probably going to work out better, but you're also leaving yourself open to the madness that is Putin. So there's all sorts of craziness going up on the 9 strike and the 11 strike. We also saw 1,750 of the 11s trading on Tuesday opening, and then 2,750 of the 9s trading on Tuesday, slightly closing. So that would be a roll up and doing it for less size. So we're kind of all over the place, listeners. And then 414 traded of the 11s on Wednesday versus 278 of the 9s. And then 0, a whopping goose egg today. So that's 5,364 of the 11s traded this week and 4,628 of the 9s. It's clearly related paper because there's 0 going up today. Worth noting, 1,362 of the 10s also traded, but it doesn't look like it's not quite 1-to-1. So all sorts of funky paper. Mr. Rhoads, are you seeing these funky February upside calls, sir? What do you think?
I am seeing those funky February calls. I'm also doing a little digging on the skew. You can hear in the background when I'm trying to do something data wise very quickly. And what I'm doing is I'm looking at the deltas to figure out the 25 delta put and 25 delta call. When you got a contract that's price is pretty darn close to 0. The skew can be kind of interesting in that way in its own right. So like if in the December contract, which trading at 310 right now, the 25 delta call would be the 375s, and the 25 delta put is going to be much closer. I have to change pages to sound smart with these numbers, but the 25 delta put, it comes in at 280. So you got 30 cents to the downside, or you got about 65 cents to the upside on that skew. Just kind of interesting, that farther out of the money calls are the 25 delta calls. So not only are you seeing them bid, but you're seeing them bid for strikes that are farther out of the money as well, or even more aggressive than what the skew is saying. I guess
that is interesting. That's a good data point to pull out. I'm seeing 6 calls going up here small. You said you saw the 8s. Where are the 8s, sir? Break them down for us.
You know what? I accidentally, when I was switching over to the natural gas, I was looking at one of the historical pages.
Ah, okay. That would explain why.
Sorry about that.
I don't see the 8s.
I looked over and it was like, oh, I'm looking at last month. Sorry. So that's why you gently corrected me.
But, there's a 6. There is a bit of a call strip going up this week as well. Not quite the 8s, but the 6s going up 400 times. It looks like it's April of 2026 all the way to December of 2026, 400 times each. So we have 2 strips.
We've seen this before.
Yeah.
I feel like we've seen where there's somebody that hedges all in. This is classroom stuff where we talk about strip hedging your exposure over the course of a year. That I assume that this is for lack of a better way to put it, legitimate user of the derivative markets. That's what I refer to the hedgers as, the ones that they are using it for the risk management benefits. But my brain works a little differently than it used to, and I just remember some of the strangest things. And I just had this recollection of us talking about something like that maybe about a year ago, going into the next year, where there was it was the top volume on a lot of longer dated natural gas options. It was all the same call strike. So then when I was accidentally looking at that historical page, that's what I was coming up with.
Yeah. So a 6 call strip out into 2026, listeners. And then we have the 2 put strip a lot closer to home here in April of 2025 all the way out to December. So strips clearly the order of the day, and just funky paper all across the board here in nat gas as well. Mr. Rhoads, we're already kind of coming up against it. We've only done 2 products. Let's see if we can squeeze in one more for the folks. Where you want to go, sir?
Go to the metals, because did anybody do anything fun in silver? with silver selling off the way it did.
I guess we could find out, sir. To the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the shiny stuff. Go into that drop down on the TWIFO menu. Pop out of energy. You're going to go down pretty much to the bottom of the list to the metals. And then in product family, you're going to go precious. Then you're going to go one slot below gold to the number 2 in the shiny stuff, which is, of course, silver. Wherever Uncle Mike is right now, his ears must be burning because he's excited. We're talking about his beloved silver. Not quite so beloved this week. Like we said, off 3.5%. Coming in at the start of the show, 31.30 in that front future, off about 1.1 handles on the week, or a little over about 3.4%. So it looks like most of the sell-off coming since Monday. So they're coming for silver out here this week. Maybe some of the bloom coming off the shiny stuff out here. In terms of volume, like we said, decent. It's an average week, I would say, in silver, about 60,000 contracts. So again, we were talking about that one put in 3-month SOFR doing 400,000 contracts, and even that one put in nat gas doing close to 50,000. So the entire silver complex doing about 61,000 contracts this week. Of that, 31.6% going up at the end of the year, as it is wont to do. Metals like to play a little bit longer term. So the DEES contract doing 31.6%. What is silver vol, you might be asking? And again, precious metals, not usually bastions of vol, but silver is going to be a little bit juicier than gold. And that is the case. 32 and 2/3 actually here in the DEES contract. That's off about 2.25 points on the week, listeners. In terms of skew, we know in a precious metal, the calls are going to be bid and the puts are going to be offered. The question is how much. This week in December, the puts last week, 4.2% cheap. This week, 6.1% cheap. So nobody liking the puts. And the calls last week, 7% bid. Now 7.5% bid. Some of that could be due to the skew rotation as we're moving to the downside of full point and blowing through some strikes. That could be accounting for that. Mr. Rhoads, sir, anything catching your eye in the number 2 in the shiny stuff this week?
It looks like they're expecting a rebound, don't you think? There's some quick analysis for you, but it looks to me like there's an expectation, or there's a concern about a move to the upside, or a continued move to the upside, although we're down a bit today. So I'm trying to see if there's any specific strike that we got most active puts there, but there are a couple of calls in there. But that big skew differential, and this is one of those markets that I really do think you should give a lot of credence to what's going on in the option market, because you do have a lot of entities that want to hedge against higher and entities that want to hedge against lower prices. It's one of the great things about the metals, and I think the energy markets as well. But to me, it looks like if you're going to twist my arm and make me bet up or down on silver, I am doing thumbs up. So the silver, Uncle Mike in the arena, I'm thumbs up. He lives to fight another day.
Yes. The gladiator lives to fight another day. What's fighting right now in silver options, listeners? It's the DEES 37s that are leading the dance this week. 1,881 of those bad boys on the tape. Almost all of that going up on Tuesday. So pretty much a one-day trade this week. 1,633. About 1,100 of that were closing, so the majority of that was closing. So some folks bailing on their 37s. Now, if past is prologue, they're probably long those, but then again, looks like about 1,200 of the 32s traded that day as well, and those were mostly closing as well. So we could have a bit of a vertical. That paper was taken off there as well. Still doesn't account for the fact that the skew is actually getting a little bit more bid up this week, but if they were bailing on a lot of upside calls. But that does appear to be the case. Again, the number 2 actually is in another month, but the number 3 most active option is also a call this week, listeners. And it's those 32s I was just talking about. Again, they did 1,452 this week versus 1,881 of the 37s. Almost all of that on Tuesday. Somebody bailing on both of those for size. That said, there is still some OI left on this strike. There's 1,382 of the 37s and 1,827 of the 32s. Makes sense. 32 is a little bit more numerous. That is closer to the at the money. So I don't know. You like that, listeners? 32, 37 vertical. It's like somebody was tired of it this week, getting the heck out of Dodge on that bad boy. And then we also have a little bit closer to home, we have the Nove 32 halves going up 1,656 times. So these would be the number 2 most active option this week. Again, Tuesday, the banger day out here, listeners. 12, almost 1,300 of those 32 half calls going up on Tuesday. Mostly opening, about 200 on Wednesday, 100 each today and Monday. Kind of back and forth, opening to closing. The OI is about 1,500, so they opened pretty much all of them back on Tuesday. There was some put action to be found out here this week, listeners. It was the Nove 28 puts. So I said we're hanging out at about a 31.30. It's the 28 puts, so a little over 3 points out of the money. You like those, listeners? They went up 1,600 times this week. Pretty active all week long. About 600 on Wednesday, slightly closing. 500 and change today against what's remnant OI of about 1,050. 342 on Tuesday, 166 on Monday, opening both days. So it's like some folks trickling in to the 28 puts throughout the week. And then not to be outdone, we have the 29 half puts also in November going up 1,400 times this week. The big day was actually Tuesday. 1,200 of those 1,400 going up on Tuesday. That was all opening. Doesn't appear to be any sort of roll or vertical. It seems like someone just liking themselves at 29 half puts, which again, a little bit closer to the fire. So those are probably going to be more attractive. And someone piling into them to the tune of 1,231. Again, looking at the skew, they could be selling those as well, obviously. They have passed his prologue. Maybe they are selling some of those puts to finance some upside action. But either way, we got some puts lighting it up out here in silver this week as well. All right, listeners, that music means we have come to the end. Man, it was a jam-packed show, even though it wasn't jam-packed full of products. We only really got to 3, but it was a lot of volume to discuss. Nonetheless, Mr. Rhoads, did you have a good time?
Always have a good time with you. Of course I had a good time.
And if folks want to keep the good times going with you throughout the week, where should they go? What should they do, sir?
Well, I've got a Substack. So it's just my name and Substack where I write some things up. I'm going to make you talk about this tomorrow, but I wrote something up on my buddy Vic's about how the November 6th SPX options are dominating the weighting in VIX this week, and that's one of the reasons it's had the tailwind that it's had. That's going to start coming off a bit. I know that's not one of the markets here, but something we'll talk about tomorrow for sure.
I was just talking about that with our buddy, the Flowmaster, on the option block an hour ago. He was pointing out the exact same thing, yes.
Was he? Okay. All right. Well, he owes me a phone call. I'm going to get on to him.
You know what they
shortly.
say about great minds, sir?
Yeah.
He did also hint he wants to see you at RMC next week. So.
I'm not going to RMC.
Oh, you're not? Oh.
No, I ended up having some scheduling issues, so I'm actually not going to go.
Oh.
That's another thing I need to talk to him about because I'm supposed to meet with him there and give him some stuff. So I am not going to RMC.
Ah, well, there you go. No live reports
Unfortunately.
from Mr. Dr. Vix at RMC next. But we'll get one from the Flowmaster, so we'll have some beam-ins nonetheless. And if folks want to check you out, Twitter or Substack, where should they go?
Twitter, it's my just full name, at Russell Rhoads. You guys do a great job of linking me every time I'm on with you. So anybody that follows you, it's not very difficult to find me.
There you go. Give the man a follow. Lots of great nuggets like that VIX calculation and other things coming from him on the old Twitters or his Substack. Or maybe if you're feeling your oats, go sign up for his class over there at the Kelley School of Business. You too can have your mind corrupted by the once and future Dr. Vix. And of course, if you want to check out these reports and everything else that's cooking over there, begin your journey, cmegroup.com/TWIFO, TWIFO. And then once you've done that, the world is your oyster. You can check out everything else on the CME site because you'll have an account and you're good to go. Check out the FedWatch, check out everything else they have cooking over there. Great educational content videos. Link to some show called TWIFO. All sorts of fun over there. That's going to do it for us on the network today. Back again tomorrow with my buddy Dr. Vix in tow for a little bit of vol views. That should be fun. Then we're off for the weekend. Not off on Monday, though. I know some markets are closed, but stock markets are open. So we'll be here bright and early for the option block, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.